At this point, we will now proceed to another type of adjusting entries, and that is provision for estimated and collectible accounts. As we all know, accounts receivable represents the amount collectible arising from rendering of services to clients or customers and sale of merchandise to customers on account and other similar transactions, which are referred to as trade receivables. And it also includes advances to officers and employees, accrued receivable, and advances to supplier, which are referred to as non-trade receivables. And here are some of the things that you need to know about the accounts receivable. The reasonable period of collection covers within 1 year or within the normal operating cycle, whichever is longer. The accounts receivable is presented in the financial statement as current asset in the balance sheet. Accounts receivable should be valued at estimated realizable value, which is determined as follows. Accounts receivable less allowance for doubtful accounts is equals to estimated realizable value. Sa business, hindi maiiwasan ang utang. That is normal in business. Kaya lang, no matter how strict and careful you are in choosing for those clients or customers na pwedeng pautangin, there are really those that could not pay. And with that, the business should expect a loss that may be incurred arising from this doubtful or hopeless accounts. And this is known as doubtful accounts expense or uncollectible account expense. There are two methods on recognizing doubtful account expense or uncollectible account expense, and these are the allowance method and the direct write-off method. The allowance method is used for general purpose reporting, while the direct write-off method is used for income tax reporting. There are also three ways on estimating uncollectible accounts, and these are: A, by setting up a certain percent of uncollectible account based on the outstanding receivable; B, by aging the accounts receivable; and C, by setting up a certain percent of uncollectible account based on credit sales. So now we will discuss the methods of recognizing uncollectible account expense, and we will have first the allowance method. Under the allowance method, the uncollectible account is being recognized in anticipation that what if not the whole amount of accounts receivable can be collected. Also, under allowance method, an estimate should be made to provide a certain percent as estimated uncollectible accounts based on the company's past experiences. The estimated uncollectible accounts is then deducted from accounts receivable to arrive at the estimated realizable value. And then the other term for estimated uncollectible accounts is allowance for doubtful accounts. Okay, so let us have this illustration under the allowance method. Let us assume that the business has an outstanding accounts receivable from various customers in the amount of 20,000 pesos. At the end of the accounting period, it is estimated that 5% of this is doubtful of collection. Okay, so let us now determine how much is the uncollectible accounts. So the outstanding accounts receivable is 20,000 pesos, and then we're going to multiply it by the 5%. So 5% is the estimated percentage of doubtful accounts or uncollectible accounts. So 20,000 times the 5% is equal to 1,000 pesos. So this is now the uncollectible accounts. And this is the adjusting entry for this. So debit to uncollectible accounts, 1,000 pesos, and then credit to allowance for uncollectible accounts, 1,000 pesos. This is to record the provision for doubtful accounts. The uncollectible account is an expense, and it will be presented in the expense section of the income statement, while the estimated uncollectible account, which is also known as allowance for doubtful accounts, will be presented in the balance sheet as a reduction from the accounts receivable to arrive at its estimated realizable value at the end of the particular period. So this is shown as follows. So we have here the accounts receivable outstanding, 20,000 pesos, less the allowance for doubtful accounts, 1,000 pesos. So that is equal to estimated realizable value, 19,000 pesos. Effects of error or omission of financial statements. So what will happen if there is no adjusting entry? For the income statement, it will result to the overstatement of profit. That is because in the first place, kung walang adjusting entry, the expense account, which is the uncollectible accounts, will not be recorded. So ang mangyayari, ang 1,000 pesos will not be part of the other expenses. So, mas maliit or understated na ngayon yung expenses. So, as a result, malaki yung magiging profit or overstated yung magiging profit. For the balance sheet, if there is no adjusting entry, the accounts receivable is going to be overstated and the owner's equity is also overstated. So if there is no adjusting entry, the allowance for uncollectible accounts or the allowance for doubtful accounts will not be recorded. And take note that the allowance for uncollectible accounts or the allowance for doubtful accounts is a deduction from the accounts receivable outstanding. So kung walang adjusting entry, so the 1,000 will not be recognized. And so the estimated realizable value of the accounts receivable will be 20,000 instead of 19,000 pesos. So overstated yung magiging accounts receivable. We will now move on to worthless accounts. When an account of a certain customer is already hopeless for collection, it is considered as a worthless account, and the same must be written off from the record. To illustrate the worthless accounts, let us go back to our illustration. So, nakapag-prepare na tayo ng adjusting entry kanina to set up the provision for doubtful accounts. So, after providing the 5% estimated uncollectible accounts, ganito yung magiging itsura ng T account or general ledger natin. So, the accounts receivable will have the outstanding debit balance of 20,000, and then the allowance for uncollectible accounts will have a credit balance of 1,000. Now, let us have this assumption. So, the 20,000 pesos outstanding accounts receivable is composed of the following. So, we have Kaasi Isagani, 6,500 pesos. Desherto Ronald, 800 pesos. Oliva Eric, 12,700 pesos. So, the total is 20,000 pesos. And we have another assumption. So, let us assume that the account of Mr. Ronald Desherto, which is 800 pesos, is hopeless for collection. Since hopeless for collection na yung account ni Mr. Ronald Desherto, so we need to write off his account. So, kailangan na nating tanggalin yung account niya from the outstanding accounts receivable. So, in order to write off his account, we need to prepare this journal entry. So, debit to allowance for uncollectible accounts, 800 pesos. And then credit to accounts receivable, Ronald Desherto. This journal entry will then be posted to the respective ledger accounts, and the result would appear as follows. So, for the accounts receivable, so the 800 pesos account of Mr. Ronald Desherto is now credited. So, after crediting it, the updated accounts receivable balance is now 19,200. The allowance for uncollectible accounts after debiting the 800 pesos now showed a balance of 200 pesos credit. After the write-off, the balance sheet will show the following. The accounts receivable will show the outstanding balance of 19,200, and then the balance of estimated uncollectible accounts of 200. So, 19,200 less 200, so the estimated realizable value is 19,000. Recovery of uncollectible accounts. So let us assume that after the write-off, biglang nagbayad si Mr. Desherto. So what will we do? Yung recording for the collection, depende yun kung kailan nangyari yung payment. But I'm not going to elaborate it further since we're still in the basic accounting. But I'm going to give you an idea on how to account for this. So this will be the journal entry. Debit to cash 800 pesos and then credit to miscellaneous income 800 pesos. This is to record the recovery of written off account. Let us now move on to the aging of accounts receivable. The aging of accounts receivable is the most reasonable basis of calculating uncollectible accounts expense based on classified past due accounts. The actual receivable being aged by category is multiplied by the uncollectible percentage to arrive at the required estimate. We have here an illustration of aging of accounts receivable. Bacolod Supermart has an outstanding accounts receivable of 150,000 pesos with recorded estimated uncollectible account of 2,000 pesos. The 150,000 outstanding accounts receivable is composed of the following. 67,000 pesos past due for 1 to 30 days with 98% probability of collection. 60,300 pesos past due for 31 to 60 days with 97% probability of collection, and 22,700 pesos past due for 61 days and over and with 95% probability of collection. Let us now compute for the required estimated uncollectible accounts through aging. So we have here accounts receivable, which is past due for 1 to 30 days, 67,000, and then multiplied by the uncollectible percentage of 2%. So 2% because the probability for collection is 98%. So 100% less 98% collectible. So there's a difference of 2%, and that 2% represents the uncollectible. So 67,000 times 2% is equals to 1,340. And then next, accounts receivable past due for 31 to 60 days, the amount of which is 60,300 pesos, and then multiplied by 3%, the uncollectible percentage. So the answer to that is 1,809. And lastly, accounts receivable past due for 61 days and over, 22,700 pesos, multiplied by the uncollectible percentage of 5%. So the answer to that is 1,135. So 1,340 plus 1,809 plus 1,135. So the total required estimated uncollectible accounts is 4,284. But take note that there is already an existing provision for uncollectible account, and that is the 2,000 pesos. So based on our computation, the required estimated uncollectible account is 4,284. Since meron na ng existing provision, which is the 2,000 pesos, so ang kailangan na lang nating idagdag in order to meet the 4,284 na required estimated uncollectible accounts, so kailangan na lang nating magdagdag ng 2,284 pesos. And in order to do that, we need to prepare the adjusting entry. And eto na yung adjusting entry natin. So, debit and collectible account expense, 2,284. And then credit to estimated and collectible accounts, 2,284. That is the record, the provision for uncollectible accounts. After the adjusting entry, the general ledger of accounts receivable and its related estimated and collectible accounts will show the following posting and balances. So for accounts receivable, it will remain at 150,000 pesos. And then for uncollectible accounts expense, so it will now have a debit balance of 2,284 after the adjusting entry. And then for an estimated and collectible accounts, so we have a credit balance of 4,284. So we have 2,000 pesos beginning balance, and then plus the adjusting entry we made, which is 2,284. So the total is the 4,284, which is the required estimated and collectible accounts. In the balance sheet or statement of financial position, the accounts receivable will appear as follows. So accounts receivable outstanding 150,000 pesos less the estimated and collectible accounts of 4,284. So the estimated realizable value of the accounts receivable is 145,716 pesos. We will now proceed to the other method of recognizing uncollectible account expense, and that is the direct write-off method. So let's go directly to the illustration. So we're using the same illustration, and then we have this assumption that Mr. Ronald Desierto has left abroad, leaving an unpaid account balance of 800 pesos. So since lumabas sa bansa si Mr. Desierto, so it is assumed na yung 800 na utang niya, hindi na yun mapapayaran pa. So under the direct write-off method, we don't need this adjusting entry. What we are going to do is to directly prepare the write-off entry. Our write-off entry includes a debit entry to uncollectible accounts, 800 pesos, and then accounts receivable, 800 pesos. This is to write off the account of Mr. Desierto. After the write-off entry, the accounts receivable balance will be 19,200 pesos. We will now proceed to the next type of adjusting entries, and that is provision for depreciation of property and equipment. The property and equipment are tangible assets which are held by an enterprise for use in the production or supply of goods and services, for rental to others, or for administrative purposes, and are expected to be used for more than 1 year period. The property and equipment include buildings, machineries, motor vehicles, furniture and fixtures, equipment, and improvement to leased facilities. And these are called depreciable assets because they are all subject to depreciation. The exemption to that is the land. The land is not subject to depreciation because it is expected to be useful to the business enterprise for an indefinite period of time. The depreciation expense is the portion of the cost of property and equipment allocated over the number of years. There are two kinds of depreciation. So these are the physical depreciation and the functional or economic depreciation. Physical depreciation is due to wear and tear because of frequent use, passage of time due to non-use, and then also because of the action of elements such as wind, sunshine, rain, or dust, and others. Functional or economic depreciation is when the property or equipment becomes obsolete. Obsolete in the sense that there are already new models or inventions available and that the business now wants to replace their old asset with a new one in order to get their target production. Under the straight line method, the annual depreciation is computed using the following formulas. If there is a given scrap value or salvage value or residual value, the formula is annual depreciation is equals to cost of the asset minus salvage value divided by the estimated life in years. If there is no scrap value, salvage value, or residual value, the formula is annual depreciation is equals to cost of the asset divided by the estimated life in years. On October 1, 2018, Metro Davao Commercial acquired air conditioning unit for office use at a cost of 80,000 pesos. Freight paid was 5,000 pesos and cost of installation was 15,000 pesos. The estimated useful life is 5 years and a residual value of 10,000 pesos. So here's what we are going to do. First, we have to compute for the depreciation expense and then prepare the related adjusting entry on December 31, 2018. Okay, so first thing that we need to do is to determine how much is the acquisition cost of the aircon. So the acquisition cost again includes the purchase price and the incidental cost. So for this transaction, the purchase price of the aircon is the 80,000 pesos, and then the incidental cost includes the freight, which is 5,000 pesos, and the cost of the installation, which is 15,000 pesos. So the total acquisition cost of the asset is 100,000 pesos. Now we will compute for the annual depreciation of the aircon. So here's the formula in computing for the annual depreciation. So we have cost of the asset minus the salvage value divided by the estimated life in years. For the cost of the asset, we have 100,000, and then we have the residual value or salvage value of 10,000. So 100,000 less 10,000, so that is equal to 90,000, and then divided by the estimated life in years, which is 5 years. So the annual depreciation for the aircon is 18,000 pesos. Take note that the aircon was acquired on October 1, 2018, and then the end of the accounting period is on December 31, 2018. So we need to compute how much is the depreciation expense from October to December. So in order to do that, we need to divide the annual depreciation of 18,000 by 12 months to get the monthly depreciation. So 18,000 divided by 12 months, so that is equal to 1,500 pesos. So this is now the monthly depreciation. And then we're going to multiply it by 3 months. So from October 1, 2018 to December 31, 2018, so that is 3 months. So 1,500 pesos times 3 months, so the depreciation expense is 4,500 pesos. The depreciation expense may also be computed in this manner. So we have here the annual depreciation of 18,000 multiplied by the fraction 3 over 12. So 3 here represents the number of months from October to December. And then the 12, so this refers to the number of months in a year. So 18,000 times 3 over 12, so that is also equal to 4,500 pesos. And this is now the adjusting entry on December 31, 2018 to record the depreciation expense from October 1 to December 31. So debit depreciation expense 4,500 pesos and then credit to accumulated depreciation 4,500 pesos. If there is no residual value, the depreciation will be determined as follows. So the formula that will be used is the annual depreciation is equals to cost of the asset divided by the estimated life in years. So the cost of the asset is the total of the cost of the aircon or the purchase price of the aircon, which is 80,000, and then plus the freight 5,000, and then plus the installation cost 15,000. So the total cost of the asset is 100,000. So 100,000 pesos divided by 5 years, so the annual depreciation is 20,000 pesos. In order to get the depreciation from October 1, 2018 to December 31, 2018, so we need to divide the 20,000 pesos annual depreciation by 12 months since there are 12 months in a year. So 20,000 divided by 12 months, so the monthly depreciation is 1,666.67. And then we're going to multiply it by 3 months from October 1, 2018 to December 31, 2018. So 1,666.67 times 3 months. So the depreciation expense is 5,000 pesos. The depreciation expense may also be computed in this manner. So we have here the 20,000 pesos annual depreciation multiplied by the fraction 3 over 12. So 3 refers to the number of months from October 1, 2018 to December 31, 2018. And then the 12 refers to the number of months in a year. So 20,000 times 3 over 12, that will give us the answer of 5,000 pesos. And this is now the adjusting entry on December 31, 2018 to record the depreciation expense from October 1, 2018 to December 31, 2018. So debit depreciation expense 5,000 pesos and then credit to accumulated depreciation 5,000 pesos. Financial statements presentation. The depreciation expense is an expense account or a nominal account, and it will be shown in the expense section of the income statement. And then the accumulated depreciation is a valuation or a contra asset or asset offset account, and it will be shown in or on the balance sheet as a reduction from the cost of the fixed assets. For the balance sheet of Metro Davao Commercial as of December 31, 2018, the aircon will be presented in the office equipment account. So we have here 100,000, and then the accumulated depreciation is also shown. So we have here the less accumulated depreciation 5,000 pesos. So the difference between the office equipment and the accumulated depreciation is 95,000 pesos. And this is called the net book value or the book value. When a company acquires 2 or more fixed assets, each fixed asset will carry its own valuation account in the books. That's why here in the balance sheet of Metro Davao Commercial, the office equipment carries its own valuation account, which is the accumulated depreciation office equipment. And then the delivery car also carries its own valuation account. So we have here the accumulated depreciation delivery car. On the other hand, the depreciation expense will be shown in the income statement at its lump sum amount. So that's why the depreciation expense here in the income statement of Metro Davao Commercial showed 17,000 pesos. So that is the total of the depreciation expense of the office equipment, 5,000, and the depreciation expense for the delivery car, 12,000. Effects of error or omission on financial statements. For the income statement, if depreciation expense is not recorded or understated, net income is overstated. So kung walang adjusting entry, walang depreciation expense in the first place. So kung walang depreciation expense, so understated yung magiging expenses. And if expenses is understated, so overstated yung magiging net income or profit. And once overstated yung net income or profit, the owner's equity is also overstated. Recording acquisition of property and equipment at a discount. When a fixed asset is acquired at a discount, the amount of the discount is considered as a reduction from its acquisition cost. So, for example, a machine is acquired on account costing 50,000 pesos. If it is paid within 20 days from the date of purchase, a 10% discount can be availed. The acquisition of machine is recorded on the date of purchase as follows. So, debit, machine 50,000, and then credit to accounts payable 50,000. This is to record the cost of machine acquired. So, note that our credit entry is accounts payable. That is because the illustration says that the machine is acquired on account. So, there was no payment made. So, utang. So, that's why we're using the accounts payable. And this will be the journal entry if the accounts payable is paid within the discount period. So, we have debit, accounts payable 50,000 pesos, credit to machine 5,000 pesos, and then credit to cash 45,000 pesos. This is to record the payment within the discount period. Take note that the 5,000 pesos discount, which is computed by multiplying the 10% discount with the cost of the machine, which is 50,000 pesos, was credited, thereby reducing the cost of the machine from 50,000 pesos to 45,000 pesos. We have here the T account of the machine. And as I mentioned a while ago, the 5,000 pesos discount reduces the cost of the machine from 50,000 pesos to 45,000 pesos. So this is now the basis of depreciating the machine, the 45,000 pesos. And this is called the depreciable cost or depreciable value of the fixed asset. Assuming that the business incurs incidental cost of 3,000 pesos. This incidental cost includes the installation and trial run. So usually, after the acquisition of the machine, the business will incur additional costs before it can be used in its operations, and that costs are called incidental cost. So this includes not only installation and trial run, but also freight and handling, and testing, and etc. So this incidental costs are added to the cost of the machine. So this will be the journal entry in order to record the installation and trial run. So debit machine 3,000 pesos and then credit to cash 3,000 pesos. So at this point, the machine will have a depreciable cost of 48,000 pesos. So 45,000 after the discount. So we have 45,000 plus here the incidental cost of 3,000 pesos. So that makes up the 48,000 pesos. Recording acquisition of property and equipment by lump sum. If the company acquires a group of assets for a lump sum price, the total cost should be allocated to the individual assets based on the relative fair market value. So for example, carding company acquired printing machine and delivery vehicle for 900,000 pesos with the following fair market value. Printing machine 450,000, delivery vehicle 150,000. So the total fair market value is 600,000 pesos. The 900,000 pesos lump sum price should be allocated as follows. So we should develop a fraction in order to compute for the respective allocated purchase price. So for the printing machine, the market value is 450,000. So we're going to convert it into fraction. 450,000 over the total market value of 600,000. So to make it short, the fraction would be 450 over 600. And then we're going to multiply it with the lump sum price of 900,000. So 450 over 600 times 900,000, that is equal to 675,000 pesos. So that is now the allocated purchase price for the printing machine. And then for the delivery vehicle, the market value is 150,000. And that is equivalent to the fraction 150,000 over 600,000. And to make it short, that is 150 over 600. So we're going to multiply it with the lump sum price of 900,000. So 900,000 times 150 over 600, that is equal to 225,000. And this is now the journal entry for the acquisition of these two assets. So debit printing machine, the amount of which is the allocated purchase price of 675,000. And then debit delivery equipment, the amount is 225,000. So this is also the allocated purchase price of the delivery vehicle. And then credit to cash, 900,000 pesos. Sale of property and equipment. Assume that the business has a computer which is acquired a year ago. Per record, the acquisition cost was 35,000 pesos and its accumulated depreciation was 7,000 pesos as of the date of sale. The net book value therefore is 28,000 pesos. Case number 1, the computer was sold for 30,000 pesos. So in this case, the sale of the office equipment, which is computer, resulted to a gain, since the cash proceeds from sale is 30,000 pesos and then the net book value is only 28,000 pesos. So there is a gain of 2,000 pesos. So this is now the journal entry to record the sale. So debit cash, 30,000 pesos. So this is our cash proceeds from the sale. And then debit accumulated depreciation office equipment, 7,000 pesos. And then credit to office equipment, 35,000 pesos. And then credit to gain on sale of office equipment, 2,000 pesos. So this is to record the sale of computer. Take note that in the journal entry to record the sale, it is not only the office equipment that is removed from the records, but also its valuation account, which is the accumulated depreciation office equipment. Case number 2, the computer was sold for 25,000 pesos. So the sale here resulted to a loss of 3,000 pesos because the cash proceeds from sale is only 25,000 and then the net book value is, or the net book value of the computer is 28,000. So there is a loss on sale of 3,000 pesos. And this is now the journal entry to record the sale at a loss. So debit cash, 25,000. So that is the cash we receive from the sale, 25,000. Debit accumulated depreciation office equipment, 7,000. And then we have here the loss on sale of office equipment, 3,000. And then credit to office equipment, 35,000 pesos. This is to record the sale of computer. So take note again that it's not only the office equipment that is removed from the records, but also its valuation account, which is that. So this is the T account of the office equipment and its valuation account, which is the accumulated depreciation before and after the sale. Before the sale, the office equipment has a debit balance of 35,000 and then the accumulated depreciation has the credit balance of 7,000. And then after the sale, after posting our journal entries to record the sale, this is now what happened. The office equipment is now a closed account. And then the accumulated depreciation is also now a closed account. We will now move on to another type of adjusting entry, and this is all about correction of erroneous journal entry. So we have here case number 1, wrong charging of account. For example, both computers and typewriters on account 250,000. So this transaction is recorded as follows. So debit to office furniture and fixtures, 250,000, and then credit to accounts payable, 250,000. So this is a wrong entry because computers and typewriters are not office furnitures and fixtures. These are office equipments. Supposedly, this transaction should be recorded by debiting office equipment, 250,000, and then by crediting accounts payable of 250,000. So there is a need to prepare a correcting entry in order to correct the previously prepared wrong entry. So in order to make a correcting entry, we need to debit the office equipment of 250,000. And then we're going to take back our debit entry of office furnitures and fixtures, which is 250,000, by crediting it. So our correcting entry will be office equipment, 250,000, and then credit office furniture and fixture, 250,000. After the adjusting entry or the correcting entry, the T accounts will appear as follows. So for the office furniture and fixtures, it will now become a closed account. So the balance will be 0 because of the adjusting entry we made, which is the credit entry of office furniture and fixture. And then the office equipment will now have the correct balance of 250,000, and then the accounts payable 250,000 credit balance.